Good evening, my dear students all across the country. Thank you very much for tuning in to the live coaching classes, which is conducted by the Board of Studies, Institute of Chartered Accountants of India. My name is CA Vignesh Suresh, and I've qualified my CA in the year 2012. And it has been more than 10 years journey as a qualified chartered accountant. And GST is a subject which is very close to my heart because it is something new. And after qualifying as a CA, if you get to know something new and some new subject, definitely you take it up as a challenge and you make sure that you gain some sort of expertise in the subject so that you can help your clients in your regular practice. I'm from Hyderabad and I'm in professional practice since the past 10 years. And I have been regularly associated with the board of, now it is still continuing and improving in leaps and bounds. So hope everyone gets value added from these sessions of mine. I have been given a total initial total of 9 sessions, what I have supposed to take. So I'm going to cover today the introduction to the GST. What exactly is GST? What is the genesis of GST? How did GST come into existence? And what is the main concept of GST is what I'm going to cover in today's session. And if time permits, we will also look at that second chapter in your study material, which is your concept of supply. Few topics in that chapter also can be covered today. And of course, concept of supply Thursday and the Saturday will be a few sessions what we are going to discuss. Chapter 1, 2, and 3 is the initial set of chapters what I'm going to cover. Right. So without wasting much time, let us move forward. Yeah. So basically, before we get into what GST is your indirect tax. So let us understand what are the differences between this direct tax and indirect tax. Then so that we can follow what exactly GST is, whether it is an indirect tax or whether it is a direct tax. So when you say a direct tax, it is paid directly by the individual to the government. So whenever this happens is the individual directly works out his taxes and he pays the tax directly to the government. A simple example of what a direct tax is nothing but your income tax. Each assessee determines his income, works out the taxes which are required to be paid and pays those taxes to the government. So that it's straight away very simple to understand. It is paid directly by the individual to the government. But in case of an indirect tax, the burden of tax is shifted from one person to the other. So if you're looking at a phone here, this particular phone, when it is first manufactured, then it is sold to the respective wholesaler, then to the retailer, and then to the final customer. So when you're purchasing this phone, the taxes which are included in this phone are not paid by you directly to the government. You pay it to the dealer from where you procure this phone, and gradually it goes to the respective government in a stage wise. The manufacturer, wholesaler, retailer pays the taxes in stages, and the final burden, of course, is on the consumer who actually purchases that particular product. The second important difference is a direct tax basically depends on your income or wealth. Okay, how much income earned, that determines what is the amount of tax which you're supposed to pay. But where taxable event for applicable here, you evaluate your income and you decide input tax credit. Of course, we'll be dealing in this chapter in great detail in the coming classes, but no ITC concept. There's no question of in the same product at a profit margin, you collect the GST on that particular sale. So whatever GST you have paid, I have a few examples during the today's session to understand what exactly is this input tax credit. Right. So therefore, these were the differences between the direct tax and indirect tax. Then, so therefore, what were the types of indirect taxes? There were multiplicity of indirect taxes. Lot of indirect taxes were there. right? Now, most of the indirect taxes, what are the types of indirect taxes which were earlier there? One is your added tax, which is levied on the sale of, when you're selling goods from one state to the other state, CST was applicable. Excise duty, as I told you, was applicable on the manufacture of goods, and customs duty was there on import of goods. But however, customs duty still continues to exist. It continues to exist on the import of goods, right? Though limited applicability is there as what is compared to prior to GST. I hope that is clear. So therefore, how exactly did GST come into existence? Before that, let me see if you have any queries. Please feel free to keep shooting your queries on the query link so that we understand. Good evening, good evening, good evening. Sir, when will the class end? The class will end at 9 p.m. 9 or 9:15 or 9 p.m. is what is the time which is given, 6 p.m. to 9 p.m. Sir, can we refer MCQ book from Institute for May 23, or will there be update from BOS? See, you can definitely refer to the MCQ, because the amendments of GST as compared to what was there in the May 22 examination and 23 is not very much. So you can definitely refer to the MCQ books. So there, network seems low. Kaushiki, you can just check it from your side, because here the signal seems pretty good. If there is any network outage from my side, the CA Institute will immediately, the tech team will tell me that it is low. So you can just try to check your internet once. I hope I'm audible to everyone. Yeah, so coming back to our discussion. So therefore, what is the, how did everything start? Way back in 2000 it started, where the concept of GST was first discussed, and a committee was set up to design the GST model for the country. Then, as in our country, things move a bit slowly. So therefore, slowly 2003, a task force was formed, and task force on fiscal responsibility and budget management. 2004 strongly recommended fully integrated GST on national basis. So 2004, a strong recommendation came regarding the GST. So therefore, then Union Finance Minister Chidambaram at that time, when presenting the budget, announced that it would come from April 1st, 2010. Thankfully, it did not come at that time, because I was studying for my exams. A new law at the time of my preparation would have definitely impacted my chances of clearing the exam. So therefore, several deadlines were missed out. And finally, what happened 2014, once the NDA government came to existence, they tabled the Constitution 122nd Amendment Bill, right? And the Lok Sabha passed the bill in 2015, and 2016 it was passed by Rajya Sabha as well. Then after ratification by more than 50% of the states, it finally received the assent of the president on 8th September 2016, and it became the Constitution 101st Amendment Act 2016. This bill paved for the introduction of GST in India. So this was the history of GST. Then following year, 2017 was the landmark year wherein GST was implemented in full force. The central GST legislations, that is the Central Goods and Service Tax Bill 2017, IGST, Integrated Goods and Service Tax, all that we will discuss in today's session. But as of now, just remember that these bills were passed in 2017 and as well. When I say Central Act and when I say State Act, what does it mean? There is one CGST Act, that is the Central Goods and Services Tax Act 2017. We are going to look at that particular legislation, same provisions, but it is enacted a Union Territory Act. So this was the main concept. And then 30th June 2017, apart from Jammu and Kashmir, all the states and union territories passed their respective acts as well, state acts, other than Jammu and Kashmir. Jammu and Kashmir had implemented GST on 8th July 2017. So this was what? This was how the GST had come into existence in the country. So it is a path-breaking indirect tax reform, definitely, because the compliance one indirect tax law, which is your GST. So in many countries, sometimes instead of GST, the word VAT also, one legislation will be there throughout the country. This is useful for smaller countries. But in case of India, where we have more than, we have around 29 states, this authority to levy the tax. So therefore, dual GST model was adopted by India. So this was which is levied on the supply. So therefore, very, very simple. Quantity of GST is supply, right? The taxable event for the chargeability of GST is supply, right? So manufacture or sale of goods and provision of services and consumption of services is there. But the term what you're supposed to use is supply. So what exactly is supply? We shall look in the chapter of taxable event, that is chapter number 2. There we will go into the word of supply. What exactly is supply and what does it cover? So therefore, in simple terms, all of you, please imprint this line in your mind that the taxable event for GST is supply. Right? Taxable event for GST supply. So continuous chain on input tax credits is available at each stage of supply. So as I told you, in case of a GST, it is levied at respective stages. The first stage, assuming manufacturer manufactures the product, sells it to the wholesaler, that is one stage. Wholesaler then purchases it in bulk and sells it to the retailer, that is the second stage. Then retailer sells it directly to the consumer, which is the third stage. So therefore, at each stage of supply, continuous chain of input tax credit will be available. And finally, the burden is borne by the final consumer. So final tax is recovered from the consumer. So I hope you understood what exactly is this GST and how it is collected. So there is no cascading effect of taxes. What do you mean by the word cascade? We always use this term called cascading effect. A cascade refers to a waterfall. When a waterfall starts from the top, the water which first comes in the beginning, then comes down. So whatever water comes in the top is already present in the water which is at the bottom of the waterfall. So therefore, a cascade, water keeps on getting added and comes down. So when I say cascading effect, that means if there is going on a tax imposed on another tax, right? First, there is a tax which is levied. Let us take an example prior to GST. Manufacture was there, excise duty was levied on that. Assuming cost of manufacture is 100 rupees, excise duty 10% is 10 rupees, 110 was the excise duty. Now, this VAT used to be calculated on 110, not on 100. So therefore, double taxation and cascading effect was prevalent there at that point of time. So therefore, in this particular situation, in GST, since there is only a single rate of single GST and all the old taxes are now merged in the GST. So therefore, only the value addition at each stage is taxed. So there is no tax on tax or there is no cascading effect. So therefore, the main benefit of GST is that it removes the cascading effect from the indirect tax system, right? Before we go into this example, let me see if we have any queries. Even yesterday, there were some network issues. Let me just check with the tech team because here I am connected. I have just run a speed test as well. Here at my side, the internet definitely is there. In case there is some network issue, I request the tech team to kindly look into it. Yeah, so now we come back to the example here. So here what happens is now the multiple stages of tax is covered here. So let us first look at how exactly GST is charged, right? So first stage is the manufacturer where the cost is 1 lakh rupees. The GST at the rate of 18% is 18,000. Right? So this is the cost at which the manufacturer sells it to the distributor. So therefore, in this particular situation, input tax credit is nil and what is paid to the government is 18,000. So therefore, here it is very simple. Since the manufacturer manufactures the product, the cost is 1 lakh rupees. GST at the rate of 18% is 18,000. There is no input tax credit here because he is the initial manufacturer and he directly pays the GST to the government at rupees 18,000. So value addition here in the first stage is 1 lakh rupees. GST at the rate of 18% is rupees 18,000. So this is basically the stage of the manufacturer where he sells it to the distributor. Now for the distributor, the cost is 1 lakh. Now let us assuming he is adding a profit margin of 11,100. The sale price is 1,11,200, on which 18% GST is collected. So distributor is selling to the retailer at 1,11,200 and collects the GST at 20,016. So this 20,016 he collects it from the retailer. So what is the input tax credit here? Input tax credit here is whatever GST the distributor is paying to the manufacturer. So whatever GST the distributor is paying to the manufacturer is considered as an input tax credit. That is, that particular amount is reduced from pay to the government. So here distributor has to pay 20,016 to the government, but he has already paid 18,000 to the manufacturer. So 18,000 will come to you as an input tax credit, and this balance 2016 here will be paid to the government. So what is paid to the government here? 20,016 minus 18,000, 2016 is paid to the government by the distributor. I hope this logic is clear. That is exactly the input tax credit. So here the input tax credit is what was paid to the manufacturer. That is nothing but 18,000 rupees. Now we come to the retailer. So what does the retailer do? Retailer purchases from the distributor at 1,11,100. Assuming he adds a profit of 24,640, the sale price comes to 1,35,840. So GST on this comes to 24,451. So this amount, this sale price is charged by the retailer to the consumer, and GST at the rate of 18% is 24,451. What is the input tax credit here? Whatever tax is paid by the retailer to the distributor. So retailer has paid to the distributor a total of 20,016. So here the input tax credit is 20,016. So output tax is 24,451 minus 20,016 is your this thing. So GST on the value addition here is 4,435. So, and the last stage goes to the consumer. He sells is the total 18% on this. So therefore, if you observe here, the total tax what is borne by the consumer is on this 1,35,840. So this 24,451 is what the consumer is bearing. So therefore, now it is fine, sir. See a network issue. Let me just check with the tech team once. Let me see if there is any issue from my side, because here it. Hello guys, I've just checked with the tech team. The tech team says that the network is fine. So for people who are facing the network issue, I request you to kindly check your connection as well, or because it definitely seems to be fine from their side. I've just re-verified from them. Okay, so now we come back to this question. So any queries here, please drop in. So this was the concept of input tax credit, how it exactly works. If you see a chain of events right from the manufacturer to the consumer, we can understand how exactly it works. So what was the need for GST? See, when you are having a tax system which has been there for so many years, taxes, why? What was the necessity of GST coming into existence here? The first reason was the deficiencies in value-added tax system. So earlier, as I told you, VAT was there. Right. So in the system of VAT, there were a lot of deficiencies because there were double taxation aspects. Because VAT was applicable, that is value-added tax was applicable only on sale of goods. Similarly, service tax was applicable only on provision of service. Right. So therefore, sometimes what happens is, whether this is a sale of goods or whether it is a provision of service is very difficult for any person to understand. Let me take a couple of examples here. First example is when you go to a restaurant and you order some food to eat. Is it a sale of good or a provision of service? Because you're not going and purchasing something, right? You're not going and purchasing something and going away. You're going to a place, you're sitting, you're ordering something to eat. That product comes to your table, a person comes and serves it to you. So there is an element of service also involved, and he also sells that particular food item to you. So therefore, in this particular situation, earlier the power to tax the goods was totally in the hands of the state, and power to tax the services were totally in the hands of the central government. So here the central government said there is a service element which is involved, therefore I will levy the service tax. The state said that it is a sale of goods, so therefore I will levy the VAT. So state government said that VAT is applicable. The central government said that service tax is applicable. Because of this, what actually happened was double taxation was there, and the end product which used to come to the consumer became very expensive because both state taxes and central taxes were applicable. This is one example. The second example is your works contract. That is, if you're entering into a construction contract, someone constructs the building and give you. So he supplies the labor as well, and he supplies the material as well. So therefore, in these particular two situations, again, the service component is involved as well as the goods is involved. So in such situations, both taxes used to be applied. That is, both your VAT used to be applicable and your service tax used to be applicable. So due to this, the double taxation used to be there. Double taxation used to be a common norm across all the sale of products. Similarly, on manufacture, excise duty was levied. Excise duty was levied by the central government, and after excise duty was levied on the cost of manufacture, again VAT was applicable. So therefore, a lot of double taxation used to happen, and ultimately the price of the product also will become higher. So therefore, deficiencies in the value-added system is one of the main reasons for the GST, the need for GST to come into existence. Yeah. Then CST also was another reason for this cascading nature to come. Why? Because CST was central sales tax. VAT used to be applicable on intrastate sale of goods. That is, if you are selling the goods within the state, VAT used to be applicable. If you are selling the goods outside the state, CST used to be applicable. So therefore, the credit of VAT what was paid, you will not get against the CST what you are collecting. So therefore, CST also was another source of distortion because it was non-VATable. VAT used to not apply on the interstate sale of goods. So if you're selling the goods to outside the state, then CST will be applicable, and credit also was not allowed. So therefore, these were some of the deficiencies which was there. So that was why a need for GST was felt by the economy. A need for GST was felt by the businessmen. That is precisely why GST came into existence. So what are the problems which are to be addressed by GST? First one, a comprehensive tax structure was created, right? So because of GST coming into existence, lot of other taxes were merged in GST, due to which the tax structure became very comprehensive and all services and goods were covered in this. So that means there is no separate tax only for services. There is no separate tax only for goods. There is only one tax, which is GST, which is applicable to both the services and the goods. And then the cascading effect is to be removed. Second important problem which is to be addressed by GST is to remove the cascading effect. There is no question of double taxation in GST. Whatever you pay, you will get as a credit. And you pay the same rate for the goods and the services also, right? How the problem of whether it is good, whether it is services, how this problem is resolved, we will come to know in the coming few sessions, wherein what is to be done in case of both element is there of both goods and services is prevalent. In that case, what is to be done? We will see that as well. And in earlier indirect taxes, there used to be a multiple taxable events. Multiple taxable events used to be there in the previous regime, that is before GST. Whereas under GST, there is only one taxable event, which is your supply, right? That is a very, very important point, a very, very genuine concern, a genuine problem which is addressed by the GST framework, right? So therefore, what is the GST framework here? Dual GST. What is CGST and SGST? Now, what is the CGST and SGST? Now, even though GST is one nation, one tax is what it was marketed as, it is technically not a one nation, one tax. A very, very strict interpretation of the term one nation, one tax is that means throughout the country, only one type of tax must be paid, right? And that must go to one government, either state government or state government. This is actually the technical meaning of one nation, one tax. But here, that is not the case. Here, the states also have been given authority to enact their own GST legislations, and the states also have been given authority to collect the tax. So therefore, in this particular situation, a dual GST model is implemented in the country, wherein both the state and the center have the power to tax the goods or services. So therefore, in this particular situation, dual GST was applicable. Thus, in this case, earlier, what was the situation? Prior to GST, the center never had the power to tax the local sales. That is, if you are making a sale within the state, the central government did not have the power to charge those. But in GST, even local sales, the center has the power to tax the intrastate sale of goods, and services taxes was totally in the power of the center. But now in GST, the state also has the power to tax the services. Fine. So what are the types of GST? CGST, SGST, and IGST. CGST is Central Goods and Services Tax, which is collected by the central government. SGST is State Goods and Service Tax, collected by the state government. IGST is what? IGST is your Integrated Goods and Service Tax, that is applicable on interstate supply of goods or services. What is this Integrated Goods and Service Tax? When you are making a supply across the state, you are making a supply from one state to the other, then IGST is applicable. The two important determinants, the two important aspects which determines whether it is an IGST is your location of supplier of services, or location of supply of goods or services, and place of supply of goods or services. Please remember this thing, very, very important. In place of supply chapter, all this will be covered. Location of supplier and place of supply. These two concepts are very important. If location of supplier and place of supply is in two different states, it is an interstate supply, and on that IGST is applicable, right? So that is the concept of your IGST. So GST is a destination-based tax. That is, the revenue accrues to the destination state. If you are selling the product from one place to the other, the GST is basically goes to the state where the goods are received, right? How this will work, we shall discuss, right? So therefore, it's a destination-based tax. One thing very, very clear. Destination state, that is the state where the goods are reached, the state where the services are provided, this is the state which benefits is that, where the destination state is the state which gets the revenue from the GST, right? So therefore, it is applicable on all the transactions involving the supply of goods or services, or both for a consideration. There are some exceptions. We'll discuss those as well. So CGST levied and collected by the central government, SGST levied by and collected by the state government or the union territory. As I told you, what is the general rule? Location of supplier and place of supply are in the same state or union territory. It is to be treated as a intrastate supply of goods or services. So location of supplier and place of supply, if it is in the same state or union territory, it is to be treated as a intrastate supply of goods or services, right? Then, as I told you, when it will be treated as an interstate supply, location of supplier and place of supply are in two different states or two different union territories, or in one is in one state, other is in one union territory. then also it will be treated as a interstate supply of goods and services, right? So as I told you, interstate supply of goods and services are subject to integrated goods and service tax, which is IGST. IGST is nothing but the sum total of CGST and SGST. That means what? Assuming the GST rate of a particular product is 18%. If it is a local sale, CGST will be 9%, SGST will be 9%. If it is an interstate sale, total, that is 9 plus 9, IGST will be 18%. So this is the concept of interstate supply and the IGST. Now let me see if we have any queries till. Yeah, it looks fine at the moment. Thankfully, no further complaints regarding the network. So I hope I am very much audible to all of you. So therefore, legislative framework, there is a single legislation, that is the CGST Act 2017 for levying the CGST. That means for levying central goods and service tax, there is one single legislation which is there, that is your CGST Act 2017. But your states and union territories, they have their own CGST or SGST or UTGST acts. That is an important point which you have to remember. Though there are multiple SGST legislation, basic features will remain the same. Now, each state has its own state legislation. Each state has its own SGST act. That doesn't mean each state will have different provisions. The very concept, the very benefit of GST will be defeated if each state had a different SGST act. So therefore, basic features like chargeability, definition of taxable event, taxable person, classification, valuation, all this continues to remain the same. This is very, very important to preserve the essence of GST, right? Then classification of goods and services. How are the goods and services classified in the GST? And classification is very important because assuming a rate of 5% is applicable on branded rice, that is, a rice is there, it has been sold under a brand, the GST rate is 5%. Now, this same rate of 5% cannot be applicable to, say, a watch. 5% GST cannot be applicable to a watch because a watch is a slightly luxury product as compared to a rice, branded rice. So therefore, in that particular situation, the watch rate will be, say, 18% or 28%, depending on what the government has decided. So therefore, classification in this case is important. So how do you classify the good? HSN system, that is harmonized system of nomenclature. HSN system is used for the goods. So what is this HSN? It is an internationally accepted coding system for goods, right? So in this HSN list, if you see, you can just Google it, you can see, it's a huge list and covers each type of product. So therefore, HSN digits is important. You have to mention the HSN code in the invoice what you give when you are supplying the goods, and you also have to mention this HSN when you are filing any GST returns. It has to be clearly mentioned. And SAC is used for services. SAC means Service Accounting Code. Service accounting code is used for services, wherein what is the code you have to mention. For CA services is one code, teaching services, training services, business management services is one. So for each of these services, different codes are prescribed, right? So therefore, classification is very important. A second very important concept in GST is your composition scheme. What is composition scheme? Now, when you are getting the GST law in the country, you cannot put something new on all the business, because businessmen can be small, businessmen can be big. If you impose a GST with regard to all small and big businessmen at once, if you impose this particular regular scheme of GST on all these particular businessmen, it definitely will not be received properly. So therefore, for small businesses, the GST have included in the law something called as a composition scheme, especially manufacturers, supplier of food articles, traders, etc. Whoever is making only intrastate supply, that is composition scheme, applies only to local sales. A simple method of tax is prescribed, which is the composition scheme. Now composition scheme is only also applicable to service providers. Composition scheme earlier in VAT, prior to GST, was known as turnover tax. That is, you forget about what you are purchasing, whatever you are selling on that, whatever you are selling on that, a specified percentage needs to be paid as tax. So composition scheme also is included. Concept of registration is there, because if you want to follow GST without registration, the government will not be able to see the data what you have and what is the sale what you are making. So therefore, threshold limits are given, right? Turnover limits are given with regard to registration. If your turnover crosses the threshold limit during a financial year, you are required to obtain the GST registration. That if the turnover crosses the threshold limit, you are required to obtain the GST registration. But that does not mean that any person who does not have the turnover cannot register under GST. That is not the case. Even though you don't have that particular turnover, you have a lesser turnover, you want to be registered under GST, you can definitely come and register under GST. Voluntary registration concept also is given in the GST law. So these are the states with different threshold limits. So earlier, when the GST law first came into existence, the threshold limit was stagnant all across the country. It was only 20 lakhs. This was the threshold limit. But now there is a threshold limit of 10 lakhs for few states, threshold limit for 20 lakhs for few states, for goods and services 20 lakhs, and for supplier of goods it is 40 lakhs for some states and 20 lakhs for some states. So don't pay much attention to this slide. This is just for you to understand the concept of threshold limit. These concepts will be covered in greater detail when we do the registration chapter. Registration chapter will go into great detail. This is just for you to understand as to how the GST registrations are allotted. The turnover limits decide on the registration under the GST law. Dhritiman, IGST is collected. IGST is collected by the central government only, right? IGST also is collected by the central government, but in the coming slides we will see where a portion of CGST or SGST can be used for paying the IGST. In that particular situation, this state government reimburses the central government. All this concept we will get to know in the coming slides. But for you, simple answer is IGST is very much collected by the central government only. IGST Act 2017 also is a central law. The states don't have anything to do with the IGST. I hope it is clear. Then concept of exemptions, apart from giving the relief like composition scheme to the small scale businesses, the GST law also provides exemptions from payment of tax on essential goods or certain services. There is no question of GST for educational services. In case of a school which provides the educational services, in case of hospitals which provides the healthcare services, in case of sale of fruits, vegetables, etc., there is no question of GST because all these are exempt from GST. I hope you got that clarity. The next point what we're going to cover is order of utilization of credit. Now, you all understood to some extent what is your input tax credit. Now, if you have input tax credit with you, it can be an IGST input tax credit, it can be CGST input tax credit, it can be SGST input tax credit. The government has specified the method of using this input tax credit. That means when you have output GST, that is, you have collected GST on the supply of goods or services, and you have some credits lying with you. What is the way you can use the credits to pay those taxes? That is what we are going to see now. First step, what you have to see is IGST credit. That means in case of input tax credits, what you have to first check what is the CGST credit, what is the SGST credit, what is the IGST credit. So if there is an IGST credit, first that credit should be used only for paying the output IGST. I hope this point is clear. If you have IGST input tax credit, you have to first utilize that credit in making payment of IGST only. After you make the payment of IGST, you can decide on how much CGST you want to pay, how much SGST you want to pay in any proportion. It is your wish, right? So therefore, again, to summarize, if you have purchased a product from outside the state. Outside the state, you have purchased a product and you have sold a product again to outside to another state. You have purchased a product. See, you are located in the state of Telangana. You have purchased a product from Karnataka. You are making the sale to Maharashtra. That means you pay IGST on the purchase and you collect IGST on the sales to Maharashtra. Similarly, you also make sales within Telangana. So that means you also have the local CGST and SGST within the Telangana. So this IGST credit, what you paid to Bangalore, Karnataka, when you purchase the goods, first you have to use towards the IGST payment towards Maharashtra. Then after that is exhausted, then only you can use the IGST credit towards the CGST and SGST. We'll see a proper example so that you get total clarity. Then after entire ITC of IGST is utilized. So once input tax credit of IGST is utilized, it becomes zero. Then we come to input tax credit of CGST. Input tax credit of CGST, first you have to use towards CGST only. After it is exhausted, you use it towards the IGST. Please remember, you cannot use the CGST ITC for paying the SGST output. Fine. CGST input tax credit cannot be used for the purpose of paying the output SGST. That is an important point which you have to remember. So after IGST credit is utilized, look at the CGST credit, utilize that, and then you look at the SGST credit. Once SGST credit is there, utilize it for the payment of output SGST. After that, if anything is left out, use it towards the payment of IGST, right? Same way again, input tax credit of SGST or UTGST cannot be utilized for the payment of CGST, right? You can use it only for the payment of SGST and you can payment for the IGST. So how to approach this? First look at IGST credit, utilize that. Second, you look at CGST credit, utilize that. Then you come to SGST and you utilize the tax credit. So this is the order of utilization of credit which is prescribed. Now let us look at a few examples with regard to utilization of credit. So first stage here, A supplies the goods or services to B. The value charged for the goods or services, let us assume it is 10,000. CGST 9%, SGST 9%, total comes to 11,800. This is stage one. So here what happens? It is a local sale. That is, A and B are located in the same state. A supplies the goods or services to B, for which A has charged 10,000 rupees. He also charged CGST and SGST. In this case, very, very simple. CGST 900 goes to central government. SGST 900 goes towards the state government. As simple as that. That is your stage number one. Now, stage number two, what happens? B is selling to C. Again, within the state. So, B is charging 12,000 rupees. Selling within the state, 9% CGST, 9% SGST. Why again CGST, SGST? Because he's selling within the same state. Total price what is charged by B comes to 14,160. So if you look at the computation of credit here, CGST payable by B here is 1,080. And whatever credit he has, you first utilize the CGST credit. Why? I told you very clearly. Output CGST is there. IGST credit in this case, it is not there because there is no interstate purchases. So there is only intrastate purchases. So whatever credit you have CGST credit on the purchase of products, you first use towards the payment of CGST. You cannot use this CGST credit for payment of the SGST. So first use CGST credit 900, net CGST payable is 180. Similarly, SGST payable is 1,080. The credit of SGST is 900, net SGST payable is 180 rupees. So therefore, in this particular situation, CGST 180, SGST 180 is required to be paid. So this is an example on the order of utilization of credit in case both the purchases and the sales are being made within the same state. So what is the revenue here earned by the central government and state government? When A is supplying to B, revenue earned by central government and state government is 900 rupees. When B is supplying to C, again here it is 180 rupees. So total revenue is 1080 each by the central government and the state government. Right? Now we come to another example wherein the goods or services are supplied from one state to the other state. Right? Stage one, what is happening? Stage one, it is happening within the same state. Stage one, the goods or services X is supplying. He is located in in state one and he is selling to A. A also is located in state one. So what is the value which is charged for the goods or services? It is 10,000. Since both are located in the same state, CGST 9%, SGST 9%, 900 each, 11,800 is the value of the supply. Totally what you have sold to A of state one. Again here, CGST, SGST will be remitted by A to the appropriate central government and state. Now, stage two, supply of goods or services by A of state one to B of state. So here if you see, there is another state which is coming into the picture. There is another state which is coming into the picture wherein he provides the services at rupees 12,000 rupees. Since different state is involved, IGST at the rate of 18%, that is 2,160 is paid. So total comes to 14,160. Right? So stage two, IGST is applicable on the supply of goods from one state to the other. Right? So how do you compute the IGST which is payable here? IGST payable gross is 2,160. Now, again, order of utilization of credit. If there is IGST payable, first you have to utilize the CGST credit. Once you utilize the CGST credit, then you utilize SGST credit. Net IGST payable is 360 rupees. Now, how does this work in practical terms? If you see here, IGST was charged on B of state 2. So if you go to the second aspect here, second column here, A of state 1 is supplying to B of state. A of state 1 is supplying to B of state 2. So therefore, A is collecting the IGST from, right? So this whatever IGST is being charged will be remitted by A of state 1 to the central government. Why? Because central government has the power to collect the IGST, right? But if you see here, central government should ideally receive 2,160 IGST from A. But here what is happening? He is using the credit of CGST and SGST. That means what is happening? The central government has to receive 2,160, but it is receiving only 360 rupees. Why? Because CGST, SGST credit is taken. So therefore, central government is receiving 360 rupees IGST. It is also receiving 900 rupees CGST because the CGST is anyways there with the central government. So this 900 rupees, what credit of SGST is being used for paying the IGST will be transferred by that state to the central government. This is the back-end process which happens. I hope it is clear, right? This is the back-end process. Here, very simple. I will show a gross IGST payable 2,160. That means what? 2,160 needs to go to the central government's hands, out of which 900 has already gone. But what and 360 is already gone because 360 IGST this fellow is paying. But what about that 900 credit? He is using 900 credit of SGST. So therefore, 900 rupees less is coming to the central government. This particular state will transfer 900 rupees to the respective central government. Right? This is the back-end process which works. Right? I hope this point is clear. This is the essence of how the IGST works against the CGST or SGST. Now you come to stage number 3. Stage 3, what happens? Now, B is supplying the goods or services to C within the state again. Again, here it is an intrastate supply. That is, B is procuring the goods and B is selling the goods to C of the same state. Value charged for goods or services is 14,400. 14,400 is the value charged for the goods or services. Again, here CGST, SGST will come. Why? Because it is a local sale. 1296 and 1296 CGST, SGST will come. A total of 16,992. What happens here? CGST payable 1296, SGST payable also is 1296. Now, this B, he has paid 1296 IGST. So that means he has IGST credit lying with him. Sorry, how much IGST he has paid? Go to the previous example. He has paid 2160. Okay, he has paid 2160 IGST. So he has a credit of 2160 which is lying. Out of this 2160, IGST credit first use against CGST payable. Total CGST payable is 1296. IGST credit you have 2160, out of which use 1296, CGST payable becomes 0. Then SGST payable is 1296, 2160 minus 1296, 864 credit is still left out. You use that credit against SGST. SGST payables to state government is 432 rupees. Here what is happening? Reverse situation. Reverse situation. Here the state is supposed to get 1296 rupees. But this person is using the credit of IGST and paying only 432. So central government will transfer this 864 back to the state government through the backdoor process. I hope you got this point very, very clear, right? This is how it works. You take the credit. Backdoor settlement will happen between the center and the state. Why? Because it is the state's money. In this case, it is the state's money. The state has to receive the money. But because that person has IGST credit, he has not gotten the money. That is why the central government will transfer that money to the state government. Fine. I hope these stages are very, very clear. So therefore, if you summarize the entire thing, who has earned how much? If you summarize the entire thing, first stage 900 each to central and state government. Second stage central has earned 360. Third one again transfer by state one to the center 900. So central has got 900. State has given 900. So state total aggregate is nil. And then central has transferred back to the state government to 864. 1296 is the central government. State government one here doesn't get anything because first it gets, and again the transfer happened because of the CGST, SGST credit, and state government two gets 1296 rupees. I hope this example is clear. So this is a comprehensive example already there on your study material as to how this order of utilization of credit works and how does the central or state government make the money here. IGST is collected. Yes, clear, sir. Okay. Thank you, Kaushiki. It's good that the network is restored. So I hope this example is clear to all of you, right? Or if you understand these examples, you'll get the concept of GST very, very clearly. All the other concepts you will understand very easily. This is the fundamental way how the GST works. So once you understand this, all the other topics will be pretty easy to understand. Please remember, indirect taxes is one of the most scoring subjects in the CA final exam. It is one subject which can make you clear both groups at once, because the amount of marks you can even get a 70 or an 80 in indirect taxes, and that will propel your group 2 total higher, and you can get a very, very good score. The main reason for this is because the absence of case laws. Case laws are not many. Case laws are very less because it is a new legislation. It was not the case before 2017. When excise duty was there on manufacture, there was a chapter called manufacture. In that chapter of manufacture, 100 case laws used to be there. 100 to 150 case laws used to be there only on the concept of manufacture. So you guys are very lucky. You will not have the headache of the case laws and the judgments at least for the next 10 years. Okay, some case laws will be there, but not much because it is a new law. It is only now going into the 6th year of the existence, right? Now, so that was an example of order of utilization of credit. Now we look at the concept of GST Common Portal. Common GST Portal is your gst.gov.in. I'm sure all of you in your article trainings, internship must have visited this website for sure. You must have seen the ups and downs of this website. A lot of times it would have troubled us and created a lot of restlessness and sleeplessness, especially before the due dates of filing the returns. So therefore, this GST portal is a website which is managed by GSTN, Goods and Services Network. Is a Section 8 company incorporated by the government to establish a uniform interface for the taxpayer, common and shared IT infrastructure between the center and the states. So what are the functions of the GSTN? Facilitating registration, granting the registration to the taxpayer, forwarding the returns. When you file the returns, it forwards the returns to the central and state authorities, computation and settlement of IGST, matching the tax payment, various reports to central based on the profile and how taxpayer is filing his returns, whether he's filing correctly, and all of that report shall be given to the government by the GST, right? And also, if you see here, apart from the GST portal, there is a separate portal for e-way bill, which is to be generated. What is an e-way bill? You will read regarding e-way bill in the documents and records chapter of GST. It is basically whenever the goods are transported from one place to the other, you are supposed to raise an e-way bill and link it to the invoice what you are raising. So e-way bill, separate website is there. In this website, you can create the e-way bill, issue the e-way bill with regard to the products which are supplied from one place to the other. So it is basically electronic e-way bill is an electronic document generated on the GST portal, which evidences the movement of goods. That is your e-way bill. Apart from that, there is also an invoice registration portal, IRP, e-invoices. E-invoices, the turnover, compulsory turnover, if it is more than 50 crores, you have to generate e-invoices. The limit was now reduced to 20 crores. So therefore, in this particular situation, this invoice registration portal is the website, right? This is also managed by the National Informatics Center. Then of course, the concept of GSPs or ASPs, GST Suvidha providers. That means what? In case of any person who is unable to get himself registered under GST, he approaches this GST Suvidha provider. They give you the checklist of documents and you can upload the documents and get the GST registration and also help you in filing of GST returns, etc. Then compensation cess. Compensation cess, again, it is a specified rate which is added. Compensation to states. Why is the need for compensation to states? Because technically, the power to levy the taxes on sale of goods was with the state. So to some extent, they will lose a lot of revenue because now also the center has the power to tax the sale of goods. So therefore, the government said that for a period of 5 years of the GST coming into existence, the center said that they will compensate some amount to the state government. So how do you raise the funds to compensate the state government? By levying a compensation cess. So on luxury items or demerit goods means such goods are not useful to the society at large, like pan masala. Because of pan masala, because of tobacco, no one is getting any use. So demerit good, if you buy that, that means you're contributing to your to the economy and you're contributing badly to your health. So therefore, in that particular situation, this cess is also added to these particular products, that is pan masala, tobacco, aerated waters, motor car, etc., computed on the value of the supply. So right, so it is leviable on intrastate as well as interstate, right, with view to provide the compensation to the states for the loss of revenue which has come for a period of 5 years, right? And also GST is levied on all goods and services except alcoholic liquor for human consumption. Alcohol is something which has been in the purview of the state government for a long time. Each state has its own policies regarding alcohol. Gujarat has a policy that there is no alcohol which is to be sold in Gujarat. Telangana, the liquor policy is very liberal. All of a sudden, left, right, and center of the liquor shops have started because it is a huge contributor to the state government. There is no doubt about that. So when GST came and liquor point was discussed, it was excluded in the constitutional amendment itself. That is, in the future also, you can forget about GST being applicable to alcoholic liquor for human consumption. It will not be applicable for sure because the states have put their foot down. They said liquor is something, please don't touch it. So therefore, in this particular situation, no question of GST on alcoholic liquor for human consumption. Coming to these 5 products, that is petroleum, diesel, crude petrol, air turbine fuel, natural gas. These 5 products, the government sat together and decided that GST shall be applicable at a later date, which is supposed to be discussed. That means in future, these products can definitely come within the purview of the GST, provided the center and the states come to an agreement with regard to the same. Definitely, we can think of this particular these particular products coming into the GST net. So therefore, to summarize everything, alcoholic liquor for human consumption continues to be under state excise duty only. Petroleum, crude petrol, diesel, petrol, ATF, natural gas. All these 5 products are now not in GST, but in the future they may come. Tobacco is one product where both central excise, GST, everything is applicable. State tax, everything is applicable. Why? Because it is something demerit good, so as much as taxes are collected. Opium, Indian hemp, and other narcotic drugs also, both GST and state excise duties are covered. Sale of immovable property, that is, if you are straight away selling a house, you are straight away selling a land, in that particular situation, the GST here is not available. Fine. So GST is not applicable in case of sale of land or immovable property. Then, now let us look at the various central and state taxes which are subsumed or merged in the GST. So therefore, in this particular situation, central excise duty is merged in GST. Service tax is merged in GST. Excise duty under Medicinal and Toilet Preparations Act is another type of excise duty that is also merged in GST. CVD is countervailing duty, which was applicable apart from customs duty, okay, on import of goods. That is also no more there. That is also subsumed in the GST. So that means, what can we imply here? In case of in customs duty, there is basic customs duty, countervailing duty, additional excise duty. In this particular situation, countervailing duty or special countervailing duty, this was no more there, and IGST is applicable on import of goods apart from basic customs duty, right? Central sales tax again merged in GST. Central surcharge and cess, what all was there for supply of goods, everything is merged in GST. Then state taxes and cesses as regard to supply of goods and services, entertainment tax, tax on lottery, betting, gambling, entry tax, VAT or sales tax, luxury tax, taxes on advertisements. All these multiple state taxes are all subsumed in or merged in the GST. I hope this thing is clear. Now, benefit to the economy. What are the various benefits to the economy here because of GST? Creation of a unified national market. What do you mean by unified national market? Because one nation, one tax is there. Everyone, right from your tier 3, tier 4 cities to your city, follow one single law. So therefore, you know what is the turnover of each particular person and where. So this unified national market is important here. And also there is a boost to the Make in India initiative. That is, manufacturers are encouraged here. Why they are encouraged? Because when I'm manufacturing a product, right from the raw material stage to my other expenses, where all I'm paying the GST, I get the input tax credit on each and everything. So therefore, manufacturers are now encouraged to get into the GST net. Then boost to investments, exports, and employment. In case of investments, in case of exports, and in case of employment, all these three, a lot of boost happens. Why? Because on export of services, export of goods, the government has not levied any GST. It is a zero rating in tax administration. You know who is supposed to who is supposed to do where. So all that is very, very interesting here. So ease of doing business and central certainty in tax administration is there, and all of that. Fine. So I hope these points are clear. Certainty in tax administration. Now, easy tax compliance. Now, because of GST coming into the picture, tax compliance has become very, very simple. It is not like before, where what it was like, multiple taxes were there. Each person you have to approach a different officer for the registration and all of that. And reduction in compliance cost. Compliance cost also is reduced. So these particular things are very much improved in the GST scenario as compared to what was there before. Then advantages for the trade and industry. How it is beneficial to the industry? Very simple. It is easy for us to understand what is the law. Mitigation of ill effects of cascading. Cascading effect is totally ruled out. Earlier, cascading effect was much more there, prevalent as it was compared to now, but it is to some extent, lot of ill effects are reduced, and benefits to small traders and entrepreneurs are also there. Small traders, entrepreneurs also hugely benefited because of this this aspect. Cascading effect is not just the small traders and entrepreneurs. Overall, if you see, the cost becomes very less. Also, power to levy and collect taxes, whether direct or indirect, emerges from the Constitution of India. Significant provisions of Constitution relating to taxation also is there here. Article 265 prohibits arbitrary collection of tax. No tax shall be levied or collected or except by the authority of law. That is simple. Now, let us look at the constitutional aspects. Now, for a law like GST to come, first things first is you have to effect the changes in the Constitution of India. Okay. In this particular situation, how it works, Constitution of India is there needs to be changes which is occurred, right? So what are the various articles which has to remember? So first what we will do is we'll look at significant provisions relating to the taxation. What are the significant provisions of the Constitution related to taxation? First one is Article 265, authority of law. It prohibits arbitrary collection of tax. That is, no tax shall be levied or collected except by authority of law. Right? So that means what? You need to have authority. The law has to give you the authority to collect the tax. Right? That is what 265 says. No tax shall be levied or collected except by authority of law. That means the law has to give you the power to collect the taxes. So therefore, in GST, the states have to be given the power to collect the taxes on the supply of goods. Fine. Then Article 245, relation between states and the union government. The power of enacting the laws is conferred on the Parliament and the legislature of the state by the Article 245 of the Constitution. So, whoever gives for enacting the law, that it totally is given to the Parliament and on the legislature of the state. So, therefore, this Article 265 and 245 of the Constitution are the main articles from where the power to levy the tax comes into existence. So after 5 years now, compensation cess will end. It was actually supposed to end, but what happened due to COVID was lot of the amount of settlement which was due to the states was not given by the government because of the COVID, and the government also was facing a tough time. So therefore, what they have done is they have extended the compensation cess for some more period. So as of now, it is for the period of 2 years till the states are compensated. Just give me 1 second, some network issue here. Yeah, now coming back. So Article 246 gives the authority to the central government and the state government to levy the tax. As I told you, as you all know, whenever you have gone through any provision of the respective law, any law for that matter, if you see, you always start out with this thing, that is the 3 types of lists. 246 in the 7th schedule to Article 246, it has the union list, it has the state list, and it has the concurrent list. Union list basically covers the aspects where the union central government has the power to levy the tax. State gives the power where the state government is supposed to levy the tax, and concurrent list is what, where both the central and state government both have the power to levy the tax. So this is your this is what is given in case of the union, state, and concurrent list. Fine. So therefore, 246A article of the Constitution granted the power to levy the GST, which was introduced by the Constitution 101st Amendment Act 2016. What was the need for a constitutional amendment? The need was that it delineated the powers to levy the tax. Both the central government and the state government have equal powers to levy the tax. That is why the power or the constitutional amendment is required, because otherwise it was very fixed. That is, central government gets to levy these taxes, state government gets to levy these taxes. So the powers were delineated. States were not empowered to levy the taxes on importation or exportation. On import of goods or services, center only has to levy the tax. This also was there because of GST was the important point which has come, that for imports or exports, only the center can be required to levy the tax. Center exclusively had the power to tax manufacture, right? Earlier, the central government only could charge the tax excise duty. So therefore in GST, if you are manufacturing a product and you are selling it, that means GST has to be charged. So earlier only central exclusively had the power, but now SGST also is supposed to be charged. That is why constitutional amendment is required, right? So why constitutional amendment is required? Because of all these reasons. States only had the power to tax the sale of goods. That is, on sale of goods, the central government could not charge any tax. Only the state government could charge any tax. So therefore, in this particular situation, since only a constitutional amendment could ensure that the central government also gets to tax the sale of goods. On interstate sale, CST was applicable. Interstate sale, CST was applicable in this case of this. Since on an interstate sale, CST was applicable. In GST, for interstate sale, IGST was applicable. That is why constitutional amendment is required. For services, the center had the power to levy the service tax in case of services. So therefore, again, how even state is levying the SGST on the supply of services. That is why a constitutional amendment is required. So these are the 6 reasons why the constitutional amendment was required. I hope this point is clear. So therefore, constitutional 101st Amendment Act 2016 was passed here. It had totally 20 sections. Newly inserted Article 279A, empowering President to constitute the Council, was notified. Remaining provisions which notified with effect from 16th September 2016. Also provides for compensation to states for loss of revenue. So because of GST being introduced, because of this, compensation to states also was provided. On the recommendations of the Goods and Service Council shall provide to compensation due to loss of revenue. This we have already discussed. So therefore, in case of due to loss of revenue, because if you observe, the sale of goods are much more, the revenue from the sale of goods is much more than the revenue from the sale of services. So therefore, definitely it is a loss to the states when the central government also gets the power to tax the supply of goods. So therefore, this compensation was definitely is required to be given to the states. Fine. Let me just check if we have any queries till now. Yeah, I think we are fine. So, significant provisions of Constitutional Amendment Act 2016. As I told you, concurrent powers for both the central and the state legislatures to make the laws governing the tax on goods and services. Levy on integrated GST on interstate sale to be levied and collected by the central government, apportioned between the union and the states. Principles for determining the place of supply, and where a supply takes place in the course of interstate trade or commerce, it shall be formulated by the parliament by law. Right? Then it provides for levy of GST on supply of all goods or services except for alcohol for human consumption. Okay, what is this constitutional amendment? What does it say? It levies the GST on all the goods and services except for alcoholic liquor for human consumption. On this alcohol for human consumption, there is no question of GST. 5 petroleum products, levied from a later date. I already told you this, right? And central government also has the power to levy excise duty in addition to GST on tobacco products, right? And also 279A provision article of the Constitution, it empowers the President of India to constitute a joint forum of central and states, namely it is known as the GST Council. This GST Council is the most important body which takes critical decisions with regard to all aspects of GST. If any rate has to be reduced, if any rate has to be increased, all these decisions will be taken only by the respective GST Council, where the President is empowered to constitute this joint forum. So therefore 279A article refers to the constitution of a GST Council. It has been notified with effect from 12th September 2016, shall be constituted comprising the Union Finance Minister, Minister of States and State Finance Minister. This GST Council only will make all recommendations with regard to the GST rate, exemptions, thresholds, etc. Some degree of harmonization, because it is very important that all finance ministers of the states and the main finance minister of the country, all these people keep meeting on a regular basis is very, very important. Only then critical decisions can be taken. So therefore, if you see every fortnightly or once in 2 months, GST Council keeps meeting and takes decisions with regard to certain critical aspects of the GST. Right. So 246A article gives the power to make the laws, notwithstanding anything contained in 246 and 254. The Parliament and state legislature has the power to make the laws with regards to the goods and services. Right? We've already seen these, just a recap. Article 248 also has amended the residuary powers of the legislature. That means the Parliament has already been given powers to make laws with respect to any matter not there in the concurrent of this. But now it has been given to subject 246A. That is, means power to make the laws with respect to goods and service tax to be imposed by the center and the states. That means legislative powers, that is residuary powers of the legislature, is subject to 246A. Why? Because 246A needs both the approval of the central and the state governments to make any changes. So that is why an amendment was also had to be done in Article 248. Then Article 249 and 250 also changes were being made. And see, all this what we are discussing is key changes which are made to the Constitution because of the GST coming into existence. Article 249 and 250 had the powers, mentions the powers to make the laws in national interest. Now, power of the Parliament to legislate with respect to state list is extended to GST. So therefore, in 249 refers to national interest. That is, in case of national interest, the Parliament is being given the power to legislate. In case of national interest, Parliament is being given the power. And in case of emergency, that is Article 250, also Parliament has given the power to make certain critical decisions with regard to GST. So therefore, in case of national interest, in case of emergency, this Article 249 and 250 can be invoked and it can be applicable to GST as well. Then Article 268, that is duties levied by the center but collected and appropriated by the states. That is stamp duties and such duties of excise on medicinal toilet preparations which are mentioned in the union list shall be levied by the government of India but shall be collected by the state in case where such duties are leviable. So this also is an important point, wherein stamp duties, excise duty on whichever is levied by the government of India shall be collected by the state in case where such duties are leviable. So in this particular article, duties of excise on medicinal and toilet preparations is omitted. Why it is omitted? Because it is no more there. It is all subsumed or merged in the GST. Article 268A was the respective article which gave the power to the central government to levy the service tax. So this particular article now is no longer relevant because there is no longer existence of the service tax. So therefore, this article is removed. Then 269A, some important points which was covered in 269A is GST on interstate supplies collected by the government of India, and such tax shall be apportioned between union and states as may be provided in the parliament on the recommendations of the council. So therefore, interstate supplies, that is integrated goods and service tax, the power to collect totally lies by the government of India, and later apportionment will happen based on the recommendations of the council. Then import of goods or services also to be treated as an interstate supply. Another very, very important point. If you are importing the goods or services, you are supposed to treat that as an interstate supply only. When it is an interstate supply only. Where an amount which is collected as IGST has been used for SGST payment or vice versa, such amount shall not form part of the consolidated fund of India or the state respectively. So if you are collecting an IGST amount, but that IGST amount you are using for the payment of SGST, that means definitely will not come, not be part of the consolidated fund, because it is used as a credit for making the respective payment. So this is for transferring the funds between the central and the state. Again, Parliament is empowered to formulate the principles regarding the place of supply and the supply of goods in case of interstate trade of commerce. So that means in case of an interstate supply, the total power is given to the Parliament with regard to formulating the principles. Fine. So before going further, that is Article 270. Let me see if there are any queries here. So what we'll do here, we'll just take a short break of 5 to 10 minutes, and then we shall cover the balance constitutional changes. Post that, we definitely will have time to also start off the second chapter, that is the most important chapter, that is taxable event, which is the concept of supply. So see you in the next 10 minutes. Yeah. Welcome back, everyone. So now continuing our discussion with regard to the constitutional amendments, let us move to the next one, the distribution of GST between the center and the states. So it is very important here to understand that 271 articles, it gives the total power to the parliament to increase any of the duties, taxes, etc. Right? It also says that surcharge is not shareable. Now, obviously, this article is amended now to exclude GST from the purview, because you cannot include GST in this with regard to increase of the duties. Exclusive power cannot be granted to the parliament. It is now in the hands of the GST Council. Article 270 speaks about how the GST should be distributed between the center and the states. It just says they have to be distributed. Way of distributing is again controlled by the GST Council and the GST network. Few definitions are incorporated in Article 366. 366(12)(a) talks about the GST, the definition of GST here. Goods and services tax means any tax on supply of goods or services or both, except taxes on supply of alcoholic liquor for human consumption. Right? So any tax on supply of goods or services or both, other than taxes on supply of alcoholic liquor for human consumption. Fine. So alcoholic liquor for human consumption has been specifically excluded from the definition itself. So since if you see in the articleship itself, in the articles of the Constitution itself excludes alcoholic liquor for human consumption. So not only now, even in the future, there is no scope of GST being levied on this particular product, right? So it is very, very clear, crystal clear. It is given the definition itself that will not be included. Then definition of services, very, very straightforward. It means anything other than goods. Simple definition is given in the articles. Apart from this, there is also a definition in the GST law, in the CGST Act 2017. That also we will discuss post the completion of this chapter. Goods are already defined under 366(12), which states that goods includes, it's an inclusive definition, all materials, commodities, and articles. State definition is given in 366(26)(b) with reference to the articles 246A, 268, 269A, and 279A. It includes a union territory with legislature. Article 286 speaks about imposing restrictions as to imposition of tax on sale or purchase of goods is amended, right? Restrictions here, it talks about Article 286 in case of imposition of tax or sale of purchase of goods which are amended. See, this article, it restrains goods from framing laws for imposition of any tax or interstate state of sale. This article has been amended to incorporate the changes arising in GST by substituting the sale or purchase with supply and the words goods with goods or services or both. So therefore, in this particular situation, states will not have the right to levy the tax on interstate supply of goods or services, totally given the power for levying the GST on interstate supply of goods or services is totally given to the union government under Article 269A. Right? So, further points with regard to Constitution of GST Council, Article 279A of the CAA talks about this Constitution of GST Council. It says that within 60 days from the date of commencement of the Constitution Act 2016 will notify. So the President will notify this and constitute this council, which is to be called as the Goods and Services Tax Council. Who all shall be comprised with this GST Council? This can be expected as a theory question for 4 to 5 marks. Union Finance Minister should be the chairperson. Union Minister or State in charge of revenue should be the member. Minister in charge of finance or taxation should be the members. So these three should be the members of the GST Council. Members of GST Council shall as soon as possible choose amongst themselves to be the vice chairman of the council for that period as they may decide. The GST Council will also make recommendations to the union and the state on the taxes, cesses, and surcharge which may be subsumed, the goods and services that may be subjected to or exempted from the goods and service tax. The GST Council, again, as I told you, is a critical body. It is a critical group of people who make very important decisions from the GST angle, and they will make the recommendations to the union and the states with regard to the taxes, cess, surcharge, and the GST aspect. They will also make recommendations to the union and the states with regard to the GST law, principles of levy, apportionment, interstate trade of commerce, the threshold limit of the turnover below which the goods and services may be exempt from the goods and services tax. The rates, including the floor rates with bands of goods and service tax, also will be covered. Special rates with regard to a specified period during national calamity or disaster during COVID time, rates of certain particular products were reduced. So this is the decision was taken by the GST Council only at that point of time. Special provisions, the special category states are there with regard to special provisions are given to these states. Threshold limits for these states are also different, and various other benefits are also given to these particular states, and any other matter with regard to the GST as the council may decide. Also, the GST Council also has the power to recommend the date on which the GST will be levied on these 5 products. Which are the 5 products? Petroleum crude, high-speed diesel, motor spirit, which is known as petrol, natural gas, and aviation turbine fuel. On these particular products, the date on which the GST can be levied shall be proposed by the GST Council. Then the guiding principles here in this particular situation is, while the discharging the functions conferred by article, the GST Council here shall be guided by a need for harmonized structure for the development of harmonized national market for the goods and services. Fine. 1/2 of the total number of members shall constitute the quorum at its meeting. This is also a very important point. 1/2 of the quorum of the meeting should be 1/2 of the members of the council. GST Council shall also determine the procedure in performance of its functions. There also the council shall take care of the procedure. This also is an important point which is to be considered. Decisions. How are the decisions supposed to be taken? Shall be taken by a majority of not less than 3/4 of the weighted votes of the members present and voting in accordance with the following principles. Vote of the central government shall have a weightage of 1/3 of the total votes cast, and votes of the state governments taken together shall be having 2/3 of the total votes cast. So this is basically the important point with regard to the decisions of the meeting. The weighted system for the votes also shall be given. Central government as well as state government have agreed to give this particular weights. Then validity of act of proceeding. No act or proceeding shall be invalid just because there is a vacancy or defect in the constitution. There is a defect, small procedural irregularities or defects cannot make any total acts of the council invalid. That also is an important point. Dispute resolution mechanism. In case of any dispute, multiple states are there. Each state have multiple political parties governing the states. Central political parties again different. It may be a situation. So 100% there is always a chance for dispute. GST Council meeting will be like people fighting only for their rights, because each state will claim what they say is right. So therefore, in that particular situation, a mechanism for resolving the disputes will be established by the GST Council, and to adjudicate the disputes between the government of India and one or more state, between government and any other state, or between 2 or more states. So this also is to be considered. Article 268 here has been amended to include 279A within this purview. At least 2/3 of the majority and ratification is specifically required to make any amendment in Article 279A relating to the council. This was basically the first chapter, the introduction chapter of your GST. I hope all of you have gotten clarity. This chapter from exam point of view is not very important, but it gives you the clarity as to what exactly we are going to study in the coming few chapters. That is why it is very important. Theory question can be asked. So just basic theory questions, test questions, few. All of these are very much covered in what we have discussed till now. Apart from this, I'll also frame few tricky test questions and send it to the BOS so that you can try working that out as well. Let us see if there are any queries. Is there difference in syllabus of GST, inter and final? See, final has everything. Inter has only a few important aspects, few basic aspects, but CA final definitely has multiple chapters. It has the entire law which you have to study. The main important topics to be focused in CA final is your input tax credit, place of supply, time of supply. These are the most important topics from the CA final perspective. So therefore, CA inter is just an introduction, like the one class what we discussed today that covers your say 75-80% of your CA inter syllabus. But in final, it is much more vast. The questions are very tricky. The questions are case studies oriented, and it is definitely much more elaborate and vast as compared to what you did in your CA inter. Give me 2 minutes. I will just load the other presentation and share the screen. I hope the screen is visible here. Let me know if it is not visible. Yeah. So fine. Now, after looking at the introduction topic, that is GST in India, that is chapter number 1 of your study material. Now we come to the second chapter, which speaks about the taxable event, which is the concept of supply. This chapter we'll be covering in the remainder of today's class, and we will also be covering this chapter in the entire Thursday's class. This particular chapter will be covered, and simultaneously in the class of Thursday, if the time permits, we will also start third chapter, that is your charge of GST. So therefore, if we see why the incidence of tax is an important point for each law or each statute. Incidence of tax is important because the timing where the tax is supposed to be imposed determines when the tax has to be paid and when the trigger happens for the respective tax to be collected. So therefore, when the tax is supposed to be imposed, that particular timing is known as incidence of tax. This incidence of tax talks about when the tax has to be levied, and it is a foundation stone for each statute. Right? Previously, indirect tax laws had variety of interpretations as to what is the incidence of tax when it has to be done. So therefore, in this particular situation now, since we are in GST, the interpretations are a lot more clearer as what it was before. Earlier, there were a lot of controversies with regard to issues like whether a particular process amounts to manufacture or not, whether the sale was a predetermined sale, whether it is sale of goods or rendering of services. These were all the controversies which were faced. But in GST, all these issues are resolved by one comprehensive taxable event is clearly given under the GST law, which is supply. So that is, supply is the taxable event. It can be sale of goods, it can be sale of services, it can be manufacture, it can be anything else. But GST is triggered. The incidence of GST is triggered only when there is a supply. And this supply can be either a supply of goods or a supply of services. So let us look at certain definitions before we go into the main subject. These definitions are critical for us to key understand, because the words keep popping up in each of the provisions what we have discussed. So therefore, we will discuss certain important definitions at length. And when I refer to the section here, it is always the CGST Act 2017. That is going to be our fundamental law, what we will discuss. Certain topics like place of supply, export of goods or services, zero rated supply is where the IGST Act will come into the picture. But if nothing is mentioned, it is always to be assumed as the CGST Act 2017. Those sections we are going to discuss. So the first definition what we are going to see is the definition of goods, which is covered under 2 subsection 52 of the CGST Act 2017. Goods means every kind of movable property other than money and security. So very, very clear, money and securities are not covered in the definition of goods. When I say securities, it means your shares and other financial assets. Initially, when the GST law first came into existence, the financial assets were also covered in the law, but a lot of resistance came from the investors and the financial institutions that they should not be covered in the goods aspect. So therefore, they have eliminated it directly from the definition of goods. So every kind of movable property other than money and securities is goods. It also includes actionable claim, and actionable claim is something that if you have a claim to any particular thing, it is an actionable claim. That is, if you have won a prize, if you have won a lottery, so that means you are entitled to that winnings from that lottery. So that is an actionable claim. So a claim on which you can do some action and you can get that particular claim is an actionable claim. That also is covered under goods. So it includes this, and also growing crops, grass and things attached to or forming part of the land, which are agreed to be severed before the supply or under a contract of supply. So here, any crops, any grass or anything which is attached or forming part of the land. But the most important point is before the supply, there should be an agreement to cut that particular grass, crops, etc. Those also comes under the term goods, right? So actionable claims also are included in the definition of goods. Okay, other than lottery, betting, gambling will not be treated as supply of goods or services by virtue of Schedule 3. This line you ignore at the moment. Once we come to the definition of supply, we will see 3 schedules. In those 3 particular schedules, which we will understand in detail as to what he is actually telling here. As of now, just ignore that line. But the main important point is lottery, betting and gambling, right? This shall only be treated as a taxable, actionable claim, whereas others is not considered to be as a supply. Just understand at the moment that actionable claim taxability applies only to lottery, betting and gambling and not to any other actionable claim apart from this. With regard to intangibles, like any license, any copyright, any carbon credit, they'll all shall be considered to be covered under goods only. So this was the definition of goods. Another important definition, this competent authority. This word keeps applying, keeps coming in all the provisions when we keep discussing. So competent authority means such authority as may be notified by the government. Simple. It can be any authority. It can be an assistant commissioner. It can be the commissioner of GST, chief commissioner, anyone for that matter. Then another interesting definition is family. Why this term definition of family is important? Because when you are covering the concept of value of supply, it says that when the transaction is made between members of the same family, they come under related persons. If they come under related persons, the value of supply is supposed to be taken as per the valuation rules. So there this family word applies. So what is that family? Who all are covered in that family? When will the value of supply rules get triggered is what we have to see here, right? So this family word importance you will realize when you are doing the chapter of value of supply, wherein it appears and how the value has to be determined in case of transactions between members of the same family. So family means what? The spouse and children of the person. So spouse and children are covered as the family of the person, but these particular persons are covered only if they are wholly or mainly dependent on the said person, right? So that means what? Your spouse and children are always covered. Okay, your spouse and children are always covered. Whether they are dependent or not dependent is secondary. they are always covered. But parents, grandparents, brothers, sisters, I will be treated as family only if they are wholly or mainly dependent on the said person. That means they depend on you only for their survival. Only in you're only taking care of their livelihood. In that particular situation only, it will be a family here in this particular situation. So it is spouse and children will always be covered. Parents, grandparents, brothers, sisters will be covered only if they are wholly or mainly dependent on the said person. So I hope this point is also clear. Any queries till now? Kaushiki, you have said visible. I hope that is not a doubt, which is a typo or something. Anyways, let's go forward. Local authority is another definition, a very, very simple definition. It includes all these bodies, panchayat, municipality, municipal committee, cantonment board, all these comes under local authority. Why this definition is important? Because in case of supplies by local authority, supplies by government in exemptions chapter, you will see a lot of exemptions here with regard to these particular aspects. Another very, very important definition is 2 subsection 17 of the GST Act 2017, which talks about business. Business, again, here is an inclusive definition. Definitions, as all of you may be knowing, either inclusive definition will be there, starts with the term means, inclusive definition always starts, inclusive definition or illustrative definition always has the word includes. So here business is an inclusive definition. You cannot summarize everything because business is such a generic term. It pretty much covers each and everything. So business is very much an inclusive definition. So business includes trade, commerce, manufacture, profession, vocation, adventure, wager, or any other similar activity, whether or not it is for a pecuniary benefit. So trade, commerce, manufacture, profession, vocation, adventure, wager, all these activities are covered under business, whether or not it is for a pecuniary benefit. Pecuniary benefit means monetary benefit. That is immaterial. See, monetary benefit consideration, these facts will come later. As of now, we only see what is the activity which can be termed as a business. So if you do a trade, commerce, manufacture, profession, vocation, etc., whether or not for pecuniary benefit or not, it is to be treated as a business. Any activity or transaction in connection with incidental or auxiliary to subclause A. So whatever you do under subclause A, if you are doing any activity or transaction associated to that, that also will come under the term business. An activity or transaction in nature of subclause A, whether or not there is volume, frequency, continuity, or regularity of such transactions. So volume, frequency, continuity, regularity doesn't matter here. Okay, these 4 doesn't matter, right? Any activity in subclause A will be treated as business only. Volume, frequency, continuity, regularity, nothing to do. You can do even one transaction, but if it comes under the above aspects, what is given in subclause A, it is definitely a business. Frequency, volume has nothing to do. You can just come here, sell one product, and then shut your business. So whatever sale you have done, that very much comes under business. Just because you did one sale and stopped, it doesn't mean that it is not a business. So frequency, volume, continuity, regularity is not important at all. Then clause number D, supply or acquisition of goods, including capital goods and services in connection with commencement or closure of business. So in connection with the commencement or closure of business, if you do any supply or acquisition of goods, that also is comes under the term business. Then provision by club, association, society, or any other body of facilities or benefits to the members. If any club or association is there, they provide the facilities or benefits to the member. That also comes under the term business. Then admission for a consideration of persons to any premises. Any persons is going to the premises, you are charging something to be admitted, like say coming to a theater, buying a theater ticket, buying a circus ticket, that also is business. Then services supplied by a person as the holder of an office, which has been accepted by him in the course or furtherance of his trade, profession, or vocation. So if you are supplying some services as a holder of an office, like president of panchayat, president of a municipality board or a cantonment board, if he provides any services, okay, that also is business. Then services provided by race club by way of totalizator or licensed bookmaker in that club. In a race club, what happens? There is a person who gives you the tickets and you bet on the results which is happening. So a person does those particular permutations and combinations and sells those tickets, who's known as a totalizer. So that also comes under the term business. Then any activity or transaction undertaken by the central government where they are engaged as public accounts. So very, very vast definition, covers a lot of things. So business therefore is very vast. It is business, nothing like you open something and profit motive is there. That is business. That is no more the concept of business, but we know the business definition in GST is very, very vast. So it covers multiple things. So therefore, nothing can be now said that it is not a business. That is the sort of coverage what the definition has. The next important definition, consideration, 2 subsection 30. What is consideration? If I do something for you, what do I get in return? Is one of the most common phrase what all of us use in our business and professional lives. Only when we were children, when friends were there, then we used to do things without expecting something in return. But now, whenever I do something, I provide some service or sell some good or whatever, what am I getting in return for that? That in simple terms is consideration. For this, one very elaborate definition is there. Let us go through the definition. 2 subsection 31, consideration in relation to supply of goods or services or includes, again it is an inclusive definition here, any payment made or to be made, whether in money or otherwise. Okay, any payment which is made or to be made, whether in money or otherwise, right? In respect, so it does not matter. Consideration can be made in money or it can be made other than money also. Very, very important point you have to remember, right? So payment to be made whether in money or otherwise, in respect of, in response to, or for the inducement of the supply of goods or services, whether by the recipient or by any other person, but shall not include any subsidy given by the central government or the state. So therefore, very simple. The first limb, the first part of the definition of consideration. Why this definition of consideration is important, let me tell you. Because when we are covering the definition of supply, the word consideration is used there. So the definition of supply itself is very important. Why? Because supply is the heart of GST. Supply is the heart of GST. So definitely the supply concept is the most important concept, and since it is the taxable event for GST. So when I'm covering the concept of supply there, this word consideration is there. So what is consideration? You know only when you see this definition. So therefore, in respect of supply of goods or services, or in inducement of the supply of goods or services, if you making any payment, whether in money or otherwise, then that is called a consideration. But please remember, the consideration shall not include any subsidy given by the state government or central government, right? And the next one is the monetary value of any act of forbearance in respect of, in response to, or for the inducement of supply of goods or services, whether by the recipient or any other person, but shall not include any subsidy given by the central government or a state government. So therefore, first thing is payment of money. Second one is monetary value of the act or forbearance. That means if you are doing the supply of goods or services, I am doing an act for that. I am doing an act for that. Monetary value of that act. It can be anything. I don't necessarily pay the money. Like very simple. If you, I'll give a brief example here. I am a chartered accountant. I am in a rented premises. I provide, I pay rent to my landlord, and I also file his income tax return. Okay. So therefore, here what happens is the rent what I pay and the professional fees what I charge for him are one and the same. So therefore, what I do is I file his tax returns. I don't charge any fee for that, and for that month I don't pay rent. So therefore, here what happens? The value of act, so that is the act of filing his return without taking anything in return, the monetary value of that I have to consider. That also is to be treated as a consideration. So you cannot say there is no consideration. I'm not taking money from him, but I'm not doing it free of cost. I'm not taking money from him because he has not taken money from me. So it is something like a barter. Barter also is an important point in the concept of supply. When we see the definition of supply, we will see that as well. Okay. Then there is a provision also given here that a deposit given in respect of supply of goods or services shall not be considered as a payment made for such supply unless the supplier applies such deposit as consideration for the said supply. Fine. So deposit given in respect of supply of goods or services shall not be considered as a payment made for such supply unless the supplier applies such deposit as a consideration for the said supply. Okay, that means what? Simple example I'll give you. You are taking a premises on rent. The monthly rent is 45,000 rupees. 3 months rent is supposed to be given as a deposit. So 1,35,000 is given as a deposit. This is the refundable deposit in case you are vacating the premises. This deposit is not a consideration. This deposit is not a consideration because he is not adjusting it against rent. When I vacate the premises, he will give it back to me. But if the same landlord, instead of terming this amount as a deposit, if he terms this amount as an advance rent, if he terms the amount as an advance rent, then very much it is to be treated as a consideration because he's taking the rent in advance and then adjusting it across the months in connection to the rental payments. So therefore, what are the important points in subsection 31? Why I'm spending more time on this definition is because it is, as I told you, it is an integral part of the concept of supply. So we have to understand what is this consideration part for us to grasp the concept of supply better. So therefore, payment received by the supplier, whether from the recipient or the other person. So therefore, even it's not like if I'm providing service to someone, he only has to pay me. If I get payment from some other person also, it is to be treated as a consideration. So therefore, it is not the amount what the recipient pays, but the amount what the supplier collects. There is a difference. Recipient doesn't pay. It doesn't mean there is no consideration. Recipient doesn't pay. Some other person on behalf of recipient pays to me. Very much a consideration. What the supplier collects has to be taken into consideration. So consideration can be in the form of money or otherwise. JDA model, the flats handed by the developer will be considered as a consideration for the development rights given by the developer, given to the developer by the landowner. Fine. That is the third point. Then, deposits as such are not liable to tax. However, where such deposits have been applied as consideration, it would be liable to tax. As I told you very clearly, we have discussed this. Trade practices, etc. All this, how it is mentioned in the agreement, all these play different. These are the factors which helps you decide whether it is a deposit or a advance. Actionable claim, we've already discussed. There is no separate definition of actionable claim here. It says that it has the same meaning as assigned to section 3 of the Transfer of Property Act 1880. There is an elaborate definition given in the Transfer of Property Act. This definition is only for understanding purposes. We don't need to remember this definition because it is not in the GST Act, right? Claim to any debt other than a debt secured by a mortgage of immovable property. A claim to any debt, but any debt loan which is a secured loan is not covered under the actionable claim. Or beneficial interest in movable property, not in the possession of the claimant, where civil courts recognize as affording grounds of relief. It existent, accruing, conditional, or contingent. Very simple. It's in case of any property is there which is under litigation, you are laying a claim to that, so that comes under the actionable claim. Another important definition. Now, this definition was very, very important at one point of time, that is before 2017. But after 2017, this became very, very neglected. Okay, it was a topic which had its importance at one point of time in CA students' mind. Manufacture means they will literally be in tension because you will not understand from where which question will come. This word for CAs who have passed before 2017, or before 2018 for that matter, the amount of significance this word has, you will never be able to understand the kind of seriousness or attached to this word. At that point, one point of time, this word used to be like one of the most tension-causing words to the CS student in indirect tax law subject. But now also it is kind of relevant, but definitely it is just 1% of what it was earlier. Why this definition is important? First of all, why this definition is there? Because in few sections, this term is used, like in composition scheme. That is, as I told you, for small scale businessmen, this scheme has been introduced. For composition scheme, this particular point is covered here. So manufacture here, it talks about means processing of raw material or inputs in any manner that results in emergence of a new product. So if you're doing the basic processing due to which the new product is emerged having a distinct name, character, and use, and the term manufacturer shall be construed accordingly. Right? So manufacture term is basically processing of raw material inputs, which results in emergence of a new product. So main important point to be noted here is emergence of new product. That is having a distinct name, character, and use, and term manufacturer shall be construed accordingly. Right? So as I told you, it has lost its significance in the GST regime. But in here, important point is for deemed exports. Deemed exports concept is there in GST. For that, manufacturer is a mandatory term. It is a precondition for an export to be considered as a deemed export. Maintenance of accounts. In case by a manufacturer, certain accounts has to be specifically maintained. That also is covered here. And then it is also used in section 10, as I told you, for composition scheme, 2% of which taken for manufacture. So that was the definition of manufacture, which is important. Definition can be as a theory question, but not very important as compared to the other definitions what we are going to cover. Again, money also very simple, straightforward definition: Indian legal tender or any foreign currency check, promissory note, bill of exchange, etc. All this comes under money. Any other instrument recognized by RBI which can be used as the consideration to settle an obligation, that will is to be treated here as a money. Shall not include any currency that is held for its numismatic value. That means a person is collecting coins, that cannot be treated as money here, even though it is actually money at one point of time, but now it is only a collectible item, that is not money. 2 subsection 108 defines the term taxable supply. What is a taxable supply? It means a supply of goods or services or both, which is leviable to tax under this Act. So therefore, any supply which is leviable to tax, that means which is subject to tax under the GST Act, is taxable supply. Leviable to tax means on the tax can be charged or not charged, right? If it is leviable to tax, it is taxable supply. If it is not charged, it becomes an exempt supply, which is leviable to tax, on which some tax rate is applicable, then it will come. So what are the important points for a person, for a supply to be considered as taxable is, first thing is the transaction must involve either goods or services or both. Either goods or services or both. Such goods or services should not be specified under Schedule 3. It should not be given under Schedule 3 at all, these goods or services. What is Schedule 3? Neither a supply of good nor a supply of service. We will see when we discuss the concept of supply. It should fall within the meaning of supply in terms of Section 7 of the CGST Act. So taxable supply definition itself has the word supply mentioned in that. So definitely the meaning of supply in Section 7 of the CGST Act, taxable supply, okay, as defined under Section 2 subsection 78. Okay, so that has to be taken into consideration here. Next concept, taxable territory. 2 subsection 109 refers to the term taxable territory. It means the territory to which the provisions of this Act applies. Very simple. Taxable territory here is India, where the provision applies, is treated as a taxable territory. So 284 defines the term person. Person includes what all? Individual, HUF, company, firm, LLP. Okay, these are all covered in the definition of the term person. Individual, HUF, company, firm, LLP, and continuation here. AOP, association of persons. This definition is very similar to the definition in the Income Tax Act also. Quite a lot of terms have been taken from there. AOP, BOI, whether incorporated or not, in India or outside India, any corporation, any body corporate incorporated by under the current country outside India, a cooperative society also is covered under the definition of the term person. Then local authority, the definition we have already seen in the previous slides. Central government or state government, society, trust, and every artificial juridical person not falling within the above. Artificial juridical person means estate of a particular person. A person has expired. He has no legal heir, so he has given it to an estate to be managed. So that comes under the artificial juridical person. 2 subsection 93 again defines the term recipient of supply of goods or services. This term also is very, very important because main concepts in GST like time of supply, place of supply, value of supply here is covers this term of recipient of supply of the goods or services. So therefore, who is the recipient of goods or services? That means where a consideration is payable for the supply of goods or services, the person who is liable to pay that consideration. Okay, where a consideration is payable for the supply of goods or services, the person who is liable to pay that consideration is to be treated as the recipient of goods. Where no consideration is payable for the supply of goods, the persons to whom the goods are delivered or made available or to whom possession it is given. So, 2 terms will be there. Recipient of supply of goods when there is a consideration, when there is no consideration. Sir, why are we discussing the point where there is no consideration? You will be surprised to know that in certain cases, GST is leviable even if there is no consideration. Even if there is no consideration, GST is leviable. We will see all those transactions in the next few slides. Fine. So therefore, that is why recipient of supply of goods or services is important. So first one, where a consideration is payable for the supply of goods or services, the person who is liable to pay that consideration. Where consideration is payable for the supply, the person who is liable to pay the consideration is the recipient. Where no consideration is payable, the person to whom the goods are delivered, in case of goods, the person to whom the goods are delivered or made available, or to whom possession, the use of goods is given or made available, right? And in case of supply of service, where no consideration is paid, the person to whom the service is rendered. These are the recipient of services. And if you are referring to any person to whom the supply is made, shall be that if you are referring to a person to whom the supply is made, it is as if you are referring to the recipient of the goods or services. It will also include the agent acting as such on behalf of the recipient in relation to the goods or services. I hope everyone are clear as to what we are discussing. These definitions are critical because, as I told you, each word will appear in our further discussion of the provisions at that point of time. Immediately, you have to refer to these definitions to understand what exactly they are covering. 2 subsection 102 defines the term services. Simple definition. It means anything other than goods, money, and securities. Anything other than goods, money, and securities is services, but includes activities relating to the use of, okay, or its kind. So any activities relating to the use of money. That means, as I told you, exchange conversion. You are converting one currency into the other currency, for which you are charging certain fee. That also is a service as per the definition of section 2 subsection 102. 2 subsection 105 defines the term supplier. Again, supplier is a critical part of the GST discussions because he is the person who is actually making the supply. So in relation to the goods or services shall mean the person supplying the said goods or services, and shall also include the agent acting on behalf of such supplier in relation to the goods or services. So therefore, supplier is any person who is supplying the service or any agent who is acting on behalf of such supplier in relation to the goods or services or goods. Fine. So chapter 3 of the GST. Now, as I told you, these were the important definitions what we have covered. So in the background of these definitions, we will now look at section 7 of the CGST Act 2017, which is the most important. I won't say exam point of view, this definition will be asked, but only if you understand this definition, you will be able to further process the upcoming concepts in the other chapters of the GST. Please remember one thing. GST as such in the law, each definition or each provision gives reference to multiple sections. Okay, so therefore you need to know very clearly what section refers to what. Because if section 7 is referred in any other section, if you don't know what section 7 is, you will not be able to understand that other section. So in this GST, each provision gives reference to multiple sections. That is why for us it is very important. Even if you don't remember the sections, subsections, clauses and all those are not required. But basic section 7 means what? Section 7 refers to supply. This is an important point which you have to remember. Now let us look at the definition. Supply includes, again, it is an inclusive definition where he has given certain activities which are to be considered as supply. Right? Inclusive definition. It is not rocket science. He says he has given an illustrative list of activities which are to be considered as supply. So what all are they? First line itself is very, very interesting. Supply includes all forms of supplies. Supply includes all forms of supply of goods or services or both, such as. The word such as is important. That means in regular common sense understanding, whatever you feel is a supply, it includes supply. That is what he says. It includes all forms of supply of goods or services or both, such as. Illustrative definition. Such as, number 1, sale, transfer, barter, exchange, license, rent, lease or disposal. Okay. What all are the activities, forms of supply which are mentioned? Sale, regular sale. You sell something, you charge for it, covered there. That means sale was one taxable event in VAT. That is before GST. But now sale is just one part of the entire ocean called as supply. So therefore, sale, transfer. Sale is if you sell a good. Transfer is what? If you transfer the if you transfer the ownership of a property from one person to the other, supply. Barter, what example I told you a few minutes back. I provide a service and I get another service in return. A barter. A barter. That means I sell it and don't take money. I provide the service for which I take some other service. I file his income tax return for which he does not take rent from me. He is providing a rental of immobile property service and I am providing a CA service. Barter. Exchange. That means you purchased a shirt. You don't like that shirt. So what you did? You went and exchanged and bought one pant. Supply. License. You have a software. Tally software, for example. I have to purchase a license for it to work in my system. Supply. Rental, very simple. I give property on rent. Rental. Lease. I give a huge ground on lease. What is the difference between rent and lease? Lease is more slightly for a long-term period, like a 50-year lease, 60-year lease. So rent is only for a every month period without many restrictions. Or disposal, very important point. Disposal also. You purchased a fixed asset. You used that fixed asset, claimed depreciation, used it for 5 years. You disposed it. You disposed it. It is a sum. Made or agreed to be made for a consideration. Therefore, all forms of supply of goods or services such as sale, transfer, barter, exchange, license, rental, lease, disposal. Made or agreed to be made. So even an agreement to be made is a supply. You need not actually make the supply. You agree to make the supply. That also is to be made a supply for a consideration. Important. For a consideration. That means as per 7 subsection 1 clause A, the consideration is 100% mandatory, required to be present. you make or agree to be made for a consideration by a person in the course or furtherance of business. Business definition. Did you understand why that business definition we spend so much time? Because it says that a supply includes all supply, such as sale, transfer, barter, disposal, blah, 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 made or agreed to be made for consideration, and in the course or furtherance of the business. So two important aspects to be present for a transaction to be considered as a supply is what? One, consideration has to be there. Number two, in the course or furtherance of the business, the supply should have happened. Only then it will come under 7 subsection 1 clause A. Now we come to 7 subsection 1 clause B. Supply includes importation of services for a consideration, whether or not in the course or furtherance of the business. That means what? 7(1)(b) talks about a situation where course or furtherance of business is not relevant. It talks only about importation of service for a consideration. That means if you are importing a service, importing means what? Procuring a service from outside the taxable territory, procuring a service from outside the country, procuring the service for a consideration, whether or not in the course or furtherance of the business. Simple example, Netflix, if you observe, you always pay in US dollars. So you are procuring the service for consideration, but it is in course or furtherance of your business. No, it is for your entertainment. Therefore, on that includes, that is also a supply as per GST. The moment it is a supply, the next question is whether it is a taxable supply or an exemption. Understood? So the first criterion to be selected for the GST to be attracted is supply. If it is supply, the next question is whether it is a taxable supply or it is an exemption. Next point. Activities specified in Schedule 1, made or agreed to be made without consideration. Just how Section 7(1)(b) removes course or furtherance of the business as a precondition for a transaction to be considered as a supply. 7(1)(c) also removes consideration as an important point to be taken for the purpose of supply. So therefore, 7(1)(c) says that any activities which are given in Schedule 1. So what is Schedule 1? We should understand. Schedule 1 speaks about activities which are made or agreed to be made without consideration. That is 7(1)(c). And then 7(1)(A). Supply includes activities to be treated as supply of goods or supply of services as per Schedule 2. Schedule 2 addresses the most important problem in pre-GST era, that is whether it is a service or a goods. So Schedule 2 puts an end to the controversy. Schedule 2 specifies multiple supplies and says that these will be either supply of goods or supply of services. So we have to only consider that in case of applying the GST rates and other taxes. Right? Queries here. I hope everyone are following this, because this is very, very important, as I kept on telling you from the exam point of view as well. Fine. Notwithstanding anything contained in subsection 1. Right? Forget about what is subsection 1 talks only about supply. So therefore, notwithstanding anything contained in subsection 1, activities or transactions specified in Schedule 3. Okay, so that means Schedule 3 specifies the activities or transactions which are not to be considered as a supply of good or a supply of service. So therefore, activities or transactions specified in Schedule 3 or such activities undertaken by the central government, state government, or local authority shall be treated neither as a supply of goods nor as a supply of services. So therefore, Schedule 3 what all activities are mentioned, Schedule 3 what all activities are mentioned, and such activities as undertaken by the central government or state government, etc. So this it's neither a supply of goods nor a supply of services. Fine. So therefore, that is an important point which you have to remember here. Then 7 subsection 3, subject to the provisions of 1A and 2, the government may clearly specify by notification that this is to be treated as supply of goods and not as supply of services, and this is supply of services and not as a supply of. So this is 7 subsection 3. Government also has the power to specify which transaction is goods, supply of goods, and which transaction is supply of services. Right? So let us understand what is this definition. Right? We will understand each point in this definition and also look at the respective 3 schedules before we wind up for today's session, so that in the next session we can cover what is the concept and what other further aspects with regard to mixed supply, composite supply is relevant for the examination point of view. So therefore here, if you understand section 7 better, it talks about the definition of supply in an inclusive manner. That is an inclusive definition. And in IGST, as I told you, IGST is a separate act, which is again controlled by the central government only. The same provisions are also applicable to IGST by virtue of section 20 of the IGST Act. 20 of the IGST Act covers the section. So as I told you, what are the ingredients of the supply? The supply should be of goods and or services. It should be made for a consideration. Okay, subject to Schedule 1, because Schedule 1 covers the activities without consideration also. It should be in course or furtherance of the business. Here also certain exceptions are there. It should be made by a taxable person and should be a taxable supply. So these are the ingredients of supply. As I told you, 107 section defines taxable person. Who is a taxable person? It means a person who is registered or liable to be registered under 22 or 24 of the GST Act 2017. 22 and 24 covers, as I told you again, what did I tell you? Other sections are randomly referred in all the other regular provisions also. So whenever you're reading a section, suddenly one other section number will pop up. So you need to understand what is that other section also. So 22 or 24 covers the registration, right? A person who is registered is automatically taxable person. So in registration chapter, you will understand this concept better. If threshold limit is 20 lakhs, if your aggregate turnover crosses 20 lakhs in the financial year, you are supposed to be registered mandatorily. That is an important point which you have to remember. Then barter and exchange also is covered within the definition of supply. And 7(1)(b) covers importation of service, whether or not in the course or furtherance of the business. Schedule 1 covers the supplies, even though they are made without consideration. Major departure from the previous indirect tax regime. Previous indirect tax regime, that is prior to GST, consideration was an important must-have factor for the tax to be applied. There is no concept of taxability without consideration. This is the first time which has happened that if there is no consideration also, it is to be treated as a supply on which tax has to be applied, right? That is what is covered under Schedule 1. Then sale and transfer, as I told you, whatever you are selling, you are transferring an ownership of a particular item, it is covered under the supply. Barter and exchange, I have given you multiple examples here. If you sell something and you get something in return other than money, barter, exchange, if you are not satisfied with an item, going and exchanging it, that is also supply. Anything other than goods and services outside the scope of supply. Very simple. It refers only to goods and services. It is not, it does not cover anything other than goods and services. License, lease, rental, etc. Transferring the goods with or without the right to use is treated as supply of service. This is very, very clearly given. License, lease, rental, etc. to be treated purely as a supply of service only. Supply should be for consideration, should be in the course or furtherance of the business, right? So this was what is covered under 7(1)(a). Let us some examples here, which are covered in 7 subsection 1 clause A. Sale by a pen, a sale of a pen by a stationery shop to a customer. Transfer of goods from a factory to depot. From factory, goods are being sent to the depot by the company. Supply. New car of 5 lakhs, exchange of old car and money 4 lakhs. Again, exchange also, it comes under the supply. Barter, as I told you, CA is providing GST consultancy services to landlord, thereby not paying rent for 1 month. It is a barter. Significance of the term consideration. We have seen the definition in great detail. It can be in money or in kind. Act or forbearance also is consideration as per the definition. Donation, donations received by charitable institutions without quid pro quo. That means if simply amount is coming, I'm not providing any service to him. I'm a charitable institution. I'm getting the donation. That is not a consideration. There is no quid pro quo. Quid pro quo means if I do something, what do I get something in return? That is nothing but your quid pro quo. Artworks sent by the artist to the galleries, whether this is a consideration or not, it all depends on how whether the painting is sold, etc., has to be taken into consideration. Right? Significance or course or furtherance of the business. For personal use, you purchase the car, and after a year, you sell it to the car dealer. Again, whether it is in course or furtherance of the business, refer the business definition. Frequency, quantity, volume, etc., is not relevant. And selling of gold bangles and earrings. So these are some examples when you talk about the consideration, and 7 subsection 1 clause A, which talks about the consideration. So here, before we move forward, significance of course or furtherance of business will take further time. I will see one, I will give you a few items here. You can just let me know what you think, whether all this is in course or furtherance of the business or not, is what you can check here. So that was your 7.1a. And now taxability of cost petroleum, of course, is a new, by virtue of a circular, it was being introduced here. So we can look at all of this as well. So therefore, multiple activities are covered under 7 subsection 1 clause A. So if you go back, therefore, to summarize what exactly the section covers is, if you once go back here, we'll cover all those items as well. But I wanted to first understand what exactly is covered in this. So let's go back to the section once before we wind up for today's class, because I want you to, we have covered only 7.1a here. We have not yet gone to 7.1b. So if you look at the respective, yeah. So therefore, the important points in the definition is supply includes all forms of supply of goods, and these all activities are covered under the term supply, made or agreed to be made for a consideration in the course or furtherance of the business. So therefore, consideration, course or furtherance of the business are the 2 important terms which you have to remember, especially in case of 7 subsection 1 clause A. Seven subsection 3 describes the activities specified in schedule 2 very much. Definitely 7 subsection 3, if you see here, it talks about the supply of goods and not as a supply of services, supply, whichever clearly indicated by 7 subsection 3 is given in the respective schedule. Any further queries? Yeah. So therefore, since section 7 is very vast and we don't have enough time left out to cover all that, I don't want to cover section 1A, then cover 2, and then leaves 3, because it is ideal that 1A, 2, 3 gets covered at one stretch. So therefore, let us stop the discussion of scope of supply for today, because in 20 minutes is not enough for us to cover 1, 2, and 3. It's always ideal for covering say 7 subsection 1, 1A, 2, and 3 all at a stretch. So therefore, let us summarize what we all discussed in today's session. We saw the concept of GST, the difference between the direct taxes and the indirect taxes. We saw as to why the GST had to come into the picture at the first place. What was the need for getting GST into the, what was the need of introducing GST in the country, and what are the benefits of the GST. And then we looked at how the constitutional amendment was important for the GST to be levied, because only if the amendment could have been made in the constitution can GST come. We saw the genesis of GST, how it right from the year 2000 to 2017. It took 17 years for the GST to come into the system. Then we saw the concept of input tax credit, how the GST is collected in multiple stages. how the GST is collected in multiple stages. We have seen these aspects as well. And apart from this, we have also order of utilization of credit. What are the types of GST, that is CGST, IGST, and SGST? Order of utilization of credit, how you have utilized the credit, how you're supposed to utilize the credit, how the IGST is settled by the central government to the state government to the central government, and vice versa. So we have looked at all these aspects and also covered the concept of GST Council, what are the decisions which they have to take, and how double taxation is avoided under the GST, how the cascading effect is prevented. All these points we discussed in the first chapter. Coming to the second chapter, we went through multiple definitions, important definitions of all the respective items which are going to be covered in chapter number 2. And then we came to the definition of supply. We briefly went through the definition of supply and looked at 7 subsection 1 clause A in particular, right? So in Thursday's session, we shall look at section 7 in great detail. I will urge every one of you to attend the session, not to miss that session at any cost, because all your coming topics are linked to chapter number 2. So therefore, I sincerely request everyone to kindly attend that particular session. So we'll look at section 7, and we'll look at the concept of mixed supply, composite supply. We'll also solve certain problems based on that, and accordingly continue our discussion. So is there any further queries, or can I wind up for the day? Yeah, so thank you very much everyone for attending the session, and I hope this session was of useful for you, was of use for you. So what we will do is kindly request you to kindly revise what we have gone through. I've already circulated the presentation. I will also upload the same now, and request everyone to kindly go through what we have discussed. Till then, we'll again meet on Thursday at 6 p.m. and continue the discussion by taking up chapter 2. Thank you very much. Have a nice day. Good night. Hope all of you preparing well for your examination. Thank you.